Good morning, everybody. This is dexfxcopy.com. I'm Max Farrow. This is March 6, 2018, and this is your daily update. So, good morning. Today is March 6th, and is also the birthday of Amy Kuipers and Brian Farrow, my business partners. They both have a birthday today. And I find that every year I find that amusing, because it's like, of all these people in the world, I meet my best friend, Amy Kuipers, in a business relationship, and also my brother, who is born March 6th. And it just, the coincidences never cease to amaze me. My birthday is November 6th. So we're, all three of us are born on the 6th day of the month. So I'm... yeah. Okay. Now, with that coincidence out of the way, let's talk for a minute. Yesterday was a down equity day. And I say that because I don't like using the words loss. Hey, listen, I'm not one of these people that gets easily offended by words. Okay. But I don't like the color red. And I don't like the word loss. But it's inevitable. It's going to happen. And that's the key that we have to speak about today. We have a very diversified portfolio. Our portfolio consists of many bots that trade. And they're constantly trading. These are on 24/7. That's right, even though the market's still closed, I know. We're just going to use this term. You don't have to be politically correct and say 24/5 or 23/4.5 or whatever it is. Okay? I'm calling it, it's always on. They're always on. And these bots that run are called the alpha series. And this alpha series that runs is very important because it collects one thing, equals data. Okay? And this data helps us to associate a prime directive of one thing, and that's called trend. Okay? And this is what I personally refer to as trend of equity. Okay? And this trend of equity as a whole is measured in three parts. One, as a whole. We look at it entirely as all the bots that are, or all the assets that are on board. Okay? All assets. All right? So we look at all assets. We then do it as a part, and we look at individual assets. Yeah, I know you're not going to get me right just a word in ass. Okay, I'm sorry. I had to put that in there. I know that's going to look really bad later on. I'm not even going to filter that out. But we look at each individual asset as its own little equity curve and what it does. Okay. Now, the good and bad part about it is that when we assess a bot on the whole part, the sum of its parts, what we're looking for is the same thing we look for in a trend in trading Forex. We're looking for that trend. We're looking for higher highs, higher lows. We're looking for consolidation, and we're looking for breakouts. At the same time, as we filter this down, this is the same thing we do for the max prime system. Right? As our equity curve travels up, if it falls down past what we refer to as a resistance or support line, we have to reassess our portfolio. And this is going to happen. This is our equity curve is going to drop down from previous lows, is going to drop down below previous lows at times, and this is not a red flag to run for the hills and go figure something else out. It's an assessment line. And the assessment line says, okay, let's go back to the bots, look to see what we have to add into it to refresh this, to get it back when something's going up. Mediocrity would tell us to say, all right, let's pull back and not have anything on for a little while until it does better. But I'm not that type of individual. I've learned to trust in the data that we have. Now, let me show you what this looks like in the reality of what we have, okay? This is the Max Prime system from yesterday, okay? Here's our equity curve. We blew down right here below our, just a little bit below our, because I really didn't validate this one as a piercing to go back and look at anything else. It wasn't until yesterday and from last night till today that we yielded out for this week. It's only, today's Tuesday, so this is not bad. Remember, we only have a couple of months worth of data in using live systems like this. So if we use our brains, if we use our assessment process wisely, this is what's going to set us apart from everybody else. It's not so much how do you handle the wins. Everybody can handle money coming at you. It's how do you handle the losses? How do you handle the downtime? How do you handle the reversal? Okay? Because this is what we did. We consolidated and we pierced through, and this requires assessment. Ass, right? Okay, I get you. I'm 12 years old too. So what is the assessment? Let's go look. We have to go back down and look at our Veda. Normally, we would just take several assets of the process. The Vader today is having sort of a day, right? And this is what normally happens. You get these wild swings of equity. And how do we handle these kind of days? And we have to look at the overall assessment of the equity curve. Is what does that look like for us? Being that we just started out, where is our 0 point? Where's our monthly? Are we up? Are we down? And if we add this entirety of a product into the portfolio, what does it look like? Well, if you added that on top, we'd be 160 bits in the hole. What happens if we added one of the other rising stars, where we changed some of the variables where this dropped down to look at the variables in a whole and to say, okay, what has happened and what can we do to change it? And we found what could change it, and look what happened. Positive for the month of February, positive for the month of March so far. If we were to add this on top of our equity, where would we be at? Well, we'd probably be breaking right just a little bit above. We'd actually be about 50 pips up if we had all three running. But listen, we can't have all three running. And I say that with all love, because the reason why we can't have all the different bots running on the system at once is because we have asset overlay. And asset overlay looks like this. Asset overlay looks like this. If the Grinch is running a Euro USD and the Simply Forex is running a Euro USD, and the Grinch calls for a buy and this Simply Forex calls for a sell, this is called a hedge. Now, on Trader's Way, no problem. On Oneida, or whatever you call it, no bueno. Okay? On any U.S. company, no bueno, right? They don't allow hedging. Okay? So that's the issue we're going to have. You know, Forex.com, no bueno. Oneida, no bueno. You can't do it. It's no good. All right? So this sort of process is that we now have to figure out on the Grinch if the euro dollar and on the Simply Forex a euro dollar, which one's better? Well, we don't know. Well, we do. We have understandings of what each one is, but I have to finite the data at that point, not just look at it as a whole, right? I have to look at each individual asset, not just their buying times, but we have to isolate a time variable as well. We have to isolate, is this asset doing well in this last month, or is it overall not doing well? Because these things trend out. They trend out doing well for a moment, then they trend down, and they trend back up, and and it all depends how much recovery that has. You know, if you stand back and look at Forex, and if I draw this box up here, no matter how crooked it is, this is time, okay, and this is price. So as we go through, we mark this box out. These lines, they could be anything. They could be from this line to this line is 1 minute. This line is 5 minutes, 2 minutes, a day, a month, whatever, a year, a lifetime. Okay? And this is a price of 0 to 100. As time goes on, price fluctuates and goes up and down. And this is basically what everything in our trading life looks like. Price is about everything in our life, our successes, our failures, our hopes, the things that we do, that we don't do. And as we create this mentality, we look for, is this month up? Is this month down? Is this month up? Ultimately, we're up. We had some down moments during the month. Overall, is the thing up? Is it down? And this is what we as a trading network really depend upon, is that data. We don't have a tremendous amount of data compared to some companies, but that's what you bought in and paid for in the very beginning. You didn't pay as much as you would in some other companies because you are getting a company that started out in alpha of November of last year with this process of dexfxcopy. And you've gone the last 4 months or 3 months. Maybe some of you have just gone the last couple of days. But you've done this with a company that has the best interest of everything involved. So what we're going to do is that we're going back through the Assess the Grinch today. And usually I like to do this on a Friday after a week's worth of data. I don't like making, during the middle of the week, knee-jerk responses. Okay? But also this week is coming for the NFP, the non-farm payroll. All right? There's news for it for different stuff on Wednesday. There's news on Thursday. There's news on Friday. Now on Friday, we're going to turn off the Max Prime and allow the bots to run, but we're going to turn off the Max Prime so there's no knee jerk. Okay? We're going to turn off trading for Max Prime. So on NFP day, there's no knee jerk. But one thing we are going to do is over the next couple of days, we're going to have Simply Forex running and some versions of the Vader running, and that's the USD CAD. Okay? USD CAD, holy crap, on the Vader, sitting at 95%. Have you seen some of these numbers? Let's go look at the numbers real quick. The Max Prime, of course, we had that bad day yesterday. For some of you that just started live, this is what you got to look at, okay? You're going to, some of you that roll that dice to get in, you waited. We had success from last month. We had 2 positive months in a row. We start out bad on the month. There were bad times during the month of February. There's some down times. But you may have started out low, but don't beat yourself up. Stay the course. Trust me, I'm looking to make you money. Okay? So the Dex Grinch took a little hit, or the Max Prime took a little hit yesterday because of the Dex Grinch took the hit. And we primarily set the last 3 days on that process. Now, luckily, we don't just throw the entire bot onto the Max Prime. I only take the best of the best. And that's what happened here. All right, this month we're sitting down pretty low. We're looking to recuperate that. And it should bounce back up. We're looking between today and tomorrow, another big bounce back up. But if not, then we have to kind of reassess how effective is the Grinch. When it's working more than 2 or 3 days in a row, how far will it go? Because you have to kind of consider how much does a market move over a process. Okay? So let's do this. This is the Dex Grinch. Let's look at the Vader. I know the Vader took a small hit yesterday. That's more than a small hit. It took a pretty big hit. But because it has big moves, remember that. It has big moves. It has moves like Vader. Okay? Let's go over and have a look at... This is simply Forex. We'll look at I wanted to look at the Vader. Let's go find the Vader. Hang on one second. Here we go. But because this bot has big moves, this is where most of us get kind of... I got to do just one quick thing here. See, all right, it's moving pretty good. And this is how the portfolio gets run. Right? This is how we watch what this process does for us. Now, we know that the Vader on the Euro AUD has issues, right? Let's go look at the Vader. We're on the Vader right now. Let's hit the summary. Okay. Go look at simply Forex. I just want to look at one thing real quick, Max Prime. All right, so Max Prime, we have a trade on right now. We have the Audi JPY. That's probably running on the Finch. Let's go run over on Grinch. There it is right there. This is looking good. I'm going to bring this down here just like this because I know that there is a possibility that what I'm doing now is securing a little bit of asset, a little bit of profit there, only because I'm allowing ourself this movement now to take a drop down to make that money. And that's something that I do with some of the trades as we go forward. Okay. But it's about allowing ourselves to make that decision. All right, so let's look at Simply Forex. Now, why did Simply Forex, the bot, change? Well, because right in here in this area and the middle part of February, I had made some changes to the actual bot on how it secured its money. So if the bot would start, if the trade would start to accelerate into a direction over a certain pips and percentage, it would simply add the stop loss and keep trailing that win until it got to a number. And if it got certain percentage past into profit, when would it get to break even? And this is why you'll see that if we go to history, you'll see that the wins, you get varying different degrees of wins, right? You're not just winning $2.60 or $1.30. You're winning 69 on one, $9. This is why your losses will also be in small part as well. So this is a trailing system now. And that's something that was added to it. And as you can see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 positive days out of the last 15. This was a lot of learning in this process. And this was adjustment from that learning into this series. So what we're looking for is right now, we're really super close. We're in positive, okay? Because it's a $7,000 account. It's in positive now, $8, and that's 80 pips. It's in the positive. Or $8.01 because there was some movement and some mistakes made here in these beginning ones. We were able to readjust. So pips were low, profit or high. Okay. So we're gonna do very well here in a very short period of time. That this Simply Forex is going to start to come back into it again, and that's when we're going to add this on. So now that we're in positive equity, I'm looking to add this back on to keep it within range and add this to our portfolio. Okay. All right. So what's next is we're going to look at, well, we added the Fran on yesterday into our alpha series, and it's still trying to figure its own out. Made a couple bucks yesterday. We're looking to how far down that road can we go with it. So we're very excited about that. Canon it is also starting to come around, but there was no adjustment to this. This is just natural return. So we look at the summary. We're trying to find the Great Britain pound USD is still staying strong at 76%. Okay. Now with that, both sides are strong, but there's not a lot of equity in there. So 24. So this is only about 5 pips per trade that it's doing on the Great Britain pound USD on the long side, and about $10, $11 a pip, or $11 a trade per on that. So this is a portfolio within itself. You could just sit and trade that, and this would be a great steady portfolio. Okay, 407 pips for $36. Move the dot on that. And that's something we have to kind of consider one day. What if our world, okay, in a world, we just trade this? Right? What if that's our world? What if in the last however many days, okay, this is a big question for you. What if you just took on the Vader and just said, trade the USD CAD, and when it trades, I'm going to trade one standard lot? What would that look like for you? Well, I'll tell you what it'll look like for you. Come on. Move the dot. One standard lot. Boom. This is what it would look like for you. But it would be boring as hell. Right? Most of you wouldn't be able to handle that process. Over the last, since January 18th to February 6th, the USD CAD traded 20 times. 20. Now that wouldn't have been per month. That 4,400 would have been over 2.5 months. From January 18th to February 18th, so 2 months. Less. So a month and a half. About 30 days worth of trading. Right? So maybe you take that one and the Vaders, or the Cannon's Great Britain pound USD. Maybe you take those. So that's what we have to kind of discuss, and this is what is no decision is made by one person, and that's what we're looking now as I go through this process for people. I mean, I have to look at, if I just looked at the, now this is what most companies do, by the way. This is what most companies would do. They would make a change here and go get a new demo so you could see this and be like, look how great our system is. This is what we refer to as the Jacob's window, right? Everybody's like, look how great our system is. Look how, they wouldn't even show you this. You wouldn't even see any of this nonsense in here. Okay? They'd be like, we made 187 pips and $17.32 this week. Today we made 191 pips. We're doing 191 pips a day. Yay. Nobody would show you the other part of it. So I'm showing you everything because everything has a natural up and down. All right. I hope this finds you well. If you just started trading live and you fell down some money yesterday, that's just the way it goes. I'm not trying to be callous. I'm trying to be real. Come and see me when you're making a lot of money and you have problems with where to put it at. This is a natural selection of things. I really appreciate you all. I know this is a little bit longer video. I want to thank you again. Happy birthday to Brian and Amy. And if you're sharing a birthday with them, let us know. We'll put you in that mix as well. Take care. I'm Max Farrell. This is dexfxcopy.com. And as always, trade well.